The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, the SEC reportedly informed NASDAQ and Cboe global markets that ETF applications, including BlackRock's, are inadequate. This comes as the agency continues its battle with centralized crypto exchanges in the United States. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
How's your weekend?
It was very good. How was yours?
Also very good, Nick. Let's get into the news this morning. We have Cboe's BZX exchange that named Coinbase as the market for its surveillance sharing agreement in its spot Bitcoin ETF refiling for several would-be Bitcoin ETF issuers. Explain to us what happened. What does this all mean?
Yeah, so the SEC has long said that one of its concerns about approving a Bitcoin ETF, a spot Bitcoin ETF specifically, is the lack of surveillance sharing agreements with regulated markets of significant size. We've seen that over and over again in various ETF application rejections. So last week, the SEC reportedly told Cboe and NASDAQ, which respectively are filing or acting as sponsors for ETFs issued by Fidelity, BlackRock, a host of other companies, that it wanted to know who the market was. And Cboe later filed saying, okay, well, our partner is going to be Coinbase for all of these ETFs. And, obviously the SEC has sued Coinbase, but importantly, it's not over Bitcoin. So the question now is, will the SEC agree that Coinbase maintains a significantly sized market for Bitcoin that will, allow it to spot any kind of potential market manipulation or fraud or any kind of malicious activity that might impact the Bitcoin ETFs prices?
Does this kind of cross a little bit of lines here, because Cboe obviously regulated by the CFTC, the CFTC approved Bitcoin futures to be traded on the Cboe based on the formulas that they use. Is this kind of a little bit of the SEC stepping on some toes here? It sounds like, I don't know, maybe I'm wrong, but also do things get harder for these ETFs by having Coinbase involved?
So as far as the first question, I don't think so. The SEC's always been the ETF regulator. The question is always what is the underlying spot market look like? So, even with Bitcoin futures, that one, the Bitcoin futures were, more directly and, explicitly regulated by the CFTC, which the SEC said when it approved the, Bitcoin futures ETFs. Right now, there's no explicitly named federal spot market regulator for spot Bitcoin markets. And that's been kind of a point of contention. And that gets into a whole broader, political conversation that, we've talked about before on the show. As far as whether Coinbase specifically is, going to make things easier or harder for Cboe, again, the SEC has sued Coinbase on, for allegedly listing unregistered securities, but none of those are Bitcoin. The SEC has, come out and said that Bitcoin is not a security. We've seen that in courts. So, it'd be very hard to argue for anyone that Bitcoin markets are securities markets. I think the bigger question comes down to, what exactly is a regulated market of significant size, and does Coinbase fulfill that parameter? And I don't know if we have enough guidance one way or another to be able to say for sure at this point.
Nick, what are the next steps you expect to see in this process?
So the first thing right now is we've seen the sponsors, that is Cboe and NASDAQ, filed a 19B4 forms. That's just kind of them saying like, okay, here's what we want to do. The SEC has yet to formally acknowledge that it's reviewing these applications. So we're waiting for them to post it first on their website and then on the Federal Register, which is the national logbook. Once it's out on the register, that kicks off the first 45-day review period. And my guess is they're going to extend that. They've always extended all the Bitcoin ETF application review periods. And, given this is going to be a first, if one of these is approved, it'll be a first time for it to be approved. My guess is we're going to go see whoever do it go through the full, 240 days. But right now, the first thing we're watching for is when the SEC publishes the documents on their website and kicks off that clock.
Nick, thanks very much for joining us this morning. We'll see you tomorrow. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.